Hi, everyone. Welcome to Crowd Forecast News, episode number 178 for April 16th, 2018. Today we will be discussing the 238th weekly report, which you should be seeing on your screen right now while I'm talking. If you'd like to get the full PDF, you can go to TimingResearch.com and download the full document there. My name is David Kosmeter. I'm the creator of TimingResearch.com. And I have Dave Landry back to moderate today after an absence of several months. So very happy to have him back. Well, he was on one of the shows a couple weeks ago, but as a guest, and now it's good to have him back as a moderator.
Thank you, David, and I appreciate you inviting me back and working around my schedule as much as you have. And thanks to, obviously, Timing Research for having me back also. Simon, let's go to you. The order that I have everybody in is just the way it printed off the website, so no particular order. But Simon, let's go to you, Simon Klein of TradeSmartForex.com. Tell us a little bit about yourself and tell us a little bit about TradeSmartForex.com.
Hi, David. It's nice to be here again, and thanks for having me again, David. Okay, so my name is Simon Klein, and I'm I guess the founder of TradeSmartForex.com, which is actually TradeSmart is the name, but TradeSmartForex.com is a website. TradeSmart is a trading education business that focuses on teaching you how to read the market professionally and also how to run a successful trading business, which includes how to build your own trading plan and strategies that fit your own personality and lifestyle. I've been trading professionally for over 13 years, since around 2005, I think I started my professional life straight out of university, graduated in computer science from University College London, and then I worked for Credit Suisse in both London and then in New York. And then in 2005, I passed the Series 7, I guess everyone knows what that is, the regulatory exam, and started trading as an equity trader for Generic Trading in Philadelphia. And then I moved on to do my own things and train people, coach people to success.
Awesome. Are you still registered?
Not anymore, no. Don't need it.
Yeah. All right, let's go over to you, Christian Fromhertz from TribecaTradeGroup.com. For those of us who don't know you, tell us a little bit about yourself and a little bit about your trading, or a little bit about your website, Tribeca Trade Group. To you, Christian.
Yeah, sure. And David, thanks for having me on again. Love to be on the panel. Always great to hear everybody's ideas and what they're thinking for the week. So very happy to be here as usual. Yeah, a little bit about myself is I was an institutional trader for a number of years, spent the majority of my institutional trading career at Bank of America Merrill Lynch. There, I traded a lot of global equities. I traded ETFs as well as I was a Delta One trader. Pretty much traded every product that you could think of on an institutional equity trading desk over the years. And just a couple of years ago, I left the institutional world and started up the Tribeca Trade Group. Basically, my idea, or what I've tried to do, is kind of bring the institutional trading desk and kind of what that's all about over to the retail investor, and that's basically how I run the Tribeca Trade Group. We have an all-day trading room, and I kind of set up just like I would as an institutional trading desk. So we go over a lot of flow. We read the tape all day long, and we're really looking for ideas. I run both a trend trading portfolio in cash, and I also run an option portfolio for a little more momentum stuff. So again, great to be on again, and I can be found at the TribecaTradeGroup.com. Thanks.
Well, great to have you back again. What's a Delta One team?
Delta One is anything. It sounds really interesting, right? Like Chuck Norris, Delta Force. Now it's basically just a anytime you have a package of derivatives, you say with the easy way to explain it is options have optionality. Those are not Delta One products. Anything like an ETF that's a basket of securities always equates to one.
Okay, so gotcha. Delta One. Okay, gotcha. That makes sense. All right, Stephen Brooks, StephenBrooks.co. Tell us a little bit about yourself and tell us a little bit about your website, StephenBrooks.co.
Cool. And yeah, obviously, thanks everyone for putting this together. I've been on this a few times. It's a lot of fun. Looking forward to hearing what everyone thinks. Really think the crowdsourcing stuff is neat. It could definitely get some legs. So really excited to hear what some of the other panelists thinks. I have been a self-directed investor for over 10 years now. Before that, I was a professional baseball player in the Kansas City Royals organization. So a little bit different background than some of the panelists, which might make this a little bit interesting. And I was a self-directed investor, and over the last couple of years, I've gotten into the education side and trying to help people out, considering my background had nothing to do with math or finance or really anything investing at all. If I was able to be successful, then some of the things that I knew, I'm able to help some other people. So, but very happy to be on here. Very excited to hear what everyone thinks.
Glad to have you. We all tend to use a lot of baseball analogies in our teaching, so maybe we could pick your brain on some of those a little here and there.
Absolutely.
Cool. Okay, for those of you who don't know me, my name is Dave Landry from TimingResearch.com. I am slotted as a swing trader, but I will stick with a trade as long as it moves in my favor. And the hybrid approach to money management that I take in order to do that is that I take a small profit off the swing trade, and then I'm willing to stick around longer term if the trade continues to materialize. There's a lot of information and a lot to the methodology, although it is very simple. But if you go to davelandry.com/CFN for crowd forecast news, and you put your information in, I'll give you some free reports. I'll give you some videos, 4 videos on the basis of the methodology and trends and all of these things, and my mindset as to the way I approach the markets. And the reason that I take this hybrid approach is that if you're only making a short-term profit, then there's still a chance that something bad could still happen. It's going to take a long time to recover from that. So ideally, you want to be able to capture a long-term gain. Unfortunately, longer term is much riskier as far as drawdowns, and you're only going to be right about 28% of the time. So by taking a hybrid approach, ideally you want to kind of have your cake and you get a bit of the best of both worlds. And again, if you go to that link, I'll give you plenty enough information to keep you busy for a long time. And also, I have a $100 gift certificate, and with that, you could buy all 3 of my books for free, or get all 3 of my books for free. And that should get you up to speed. So get to know me first, and you'll get a pretty good idea what's going on. I'm going to skip the bio. I'm embarrassed to say how long I've been at this because I'm pretty old now. But you could also get that off of my website if you're interested. Simon, let's go back to you. What direction do you think the S&P will move from today's open to Friday's close? And then once you give us that, go ahead and rate your confidence to your answer by estimating the probability you have correctly predicted this week's market's move. And then we'll get to the why in the next segment. But for now, just let us know up, down, and what percentage correct you think you are.
Like I said, I think we're more likely to go up. I'll give you the reasons for that later. And I would say probably about 65% higher. 65.
Okay, cool. All right, Christian, same question.
I'll also say up, and I'll say a nice 75%.
75%. Wow, that's pretty good. We've had a couple of 100% on the show before, so but 75, that's a pretty good confidence there. Steven, same question, up, down?
I'm going with up, and I'm going percentage is 0 because nothing's a sure thing in this business.
I was taking the shower right before this presentation, and I was in my head trying to think, I'm going to go up or down, and then what percentage I'm going to go. And I was thinking, I'm going to go with 0 because nobody's ever done that. And you beat me to it.
0.
Okay. I'm going to go with down, and I'm going to copy off of Steven, and I'm going to go with 0 too. And I just think this market is really, really choppy, and I think it's very difficult to predict at this juncture. And I'll flesh that out in just 1 minute. I often say, as I said a few minutes ago, you can only predict the short term when it comes to markets. And a few of my clients have misconstrued that as that you could always predict the short term. No, you can't always predict the short term. But let's go back to Simon. And Simon, let's go back to you. Let us know I guess I better read the questions since I haven't been here in a while. Are you writing smaller? Are you using a smaller font now? All right. For your answer to the prior question, what specific reasons do you think the S&P will be headed higher? And if you want to, Simon, you could share your screen. Oh, he already did. He's one step ahead of me. All right, Simon, it's you.
Wait, I was just trying to think about that. If you say going up 0%, then doesn't that mean going down 100%?
Well, what about sideways?
Yeah, that's how I meant the question to be, is can get bogged down in a explanation of statistics, but yeah, that would be technically correct. Is that
Just
0% confidence of going up would be 100% confidence going down. So.
Zero confidence going up, yeah, definitely. Okay, anyway, that aside, so let me show you something very interesting on the charts here. And I'm going to zoom into the daily chart. And basically, we saw this move, which is happening today, and we pointed that out in our trading room, we run every day, that the odds are more likely that we're going higher, at least today, to start with, and possibly up to this area. Now, why is that? Now, watch what's happening here. If you watch the market's consolidating sideways here. Yeah, but notice what's happening every time the market comes down. We stop at a higher point than the previous. Notice over here. Notice over here. So what's happening is pressure's building up on the upside against the ceiling, so to say. So imagine if you're in a room and the floor keeps moving up and up. Every time it goes down, it moves. Every time it moves up and goes down, it stops at a higher point. So which way is it likely to break if that happens? To the upside. And that's exactly what happened. We've broken above this area today. So where's it likely to go? So once you've broken above, there's no real supply here until you get up to this level. So that's probably where it's going this week. And that's why I think more likely up than down, because of the way the market's structured. And again, it's very important when you're trading to understand how to read the candlesticks, how to read price structure, how to read price action. And I think that's the first place that everyone needs to begin. And if you didn't begin there and you're trading now using indicators and whatever else you're doing, I think it's very worthwhile to take a step back, start again, and relearn how to read just pure price. It's very liberating to do that. And you might find that after you can do that, you won't need any indicators anymore. So
Amen.
That's why
Amen.
I think higher.
Yeah.
Again, it takes years to get to that level, but it's easy when you're there, but difficult when you can't see it from that vantage point.
Yeah, it's ironic you mentioned that, because I couldn't come up with a name for a course, and I ended up calling it Trading Full Circle, because we all tend to go through this journey, and the real enlightenment comes when you peel away those indicators and just go back to the price bars. And then as far as indicators myself, I just occasionally use a moving average, which I'll show in just 1 minute. But amen to that. That's, one of the complaints about the shows is not enough controversy. So
I think when you all
like
get
we're not
to
get any today. All right, Christian, let's go to you. Maybe we can argue a little. I'm sorry, Simon, you said something?
I was going to say, I know there's a time delay a little bit, but what I was going to say is it's very interesting when you look at everyone that has gone through that trading journey and they're looking back on it, because you can see very clearly from where you are once you've got there, and you look back at all the pain and suffering you went through in order to, and the hard work that you went through in order to get there. But once you finally get there, it's very easy and it's simple, but it's not easy to get there.
I know. It's the hardest, easiest thing you ever do. And one of the things that I write about on occasion is I've helped a couple of kids win stock picking contests. And it's not because I had a superior methodology. I was just telling them to buy new highs. And everybody else in the class was probably trying to outsmart the market. And the people that I helped could care less about the course. They just wanted to get out of it. And they did exactly what I told them to do. And they did fantastic. But yeah, if they tried to trade professionally, they would probably, then everything would change really quickly, I would imagine.
Yep.
All right, Christian, let's go to you. Where were we? Oh, yeah. For your answer to number 1 and 2, any specific reasons that you feel that the S&P is headed higher or lower for the week? In your case,
yeah,
higher?
Sure. I've got a couple. I should be sharing the screen. If you can't see it, let me know, but I should be sharing now. Yeah, so I've got a couple different reasons that I think we're starting to, there's a couple reasons why I think we're starting to work our way to the upside. So I tend to look at small caps a lot. I view the small caps as a leading indicator. And the last week, while everybody's kind of figuring out, while the S&P chops around back and forth, kind of directionless and not a lot of momentum, the small caps have actually been turning higher, and I view that's a really nice leading indicator to take a look at. They will often make that move first, kind of as a little bit of a hint. So I view that as really strong. And then also taking a look, which I'm having just my screen's a little bit slow to adjust for whatever reason. I think I need a reboot actually. But I also like what's going on in the VIX, which started to tail off on Friday. And, even going into the weekend when you kind of knew something might be happening, with the global tensions, but the VIX really started to break down late towards the end of the week. And then today it's down 5%. So, we're no longer for a while we were trading above 20, we were trading about 20 to 25 as the market was kind of, churning around, trying to figure out which direction it wanted to go. It is definitively breaking down. Now it did this again. It did this in the beginning of March, but I think this time it's for real. And I think we're getting out of that volatility. And then my last reason is just the market breadth, I think, is getting stronger. I think the first time, if you go back to the S&P chart, which I'm hoping my screen will adjust. But the first time that we rallied back in, well, I guess that was the beginning of the first half of February, and kind of fell on our face. There wasn't really much that was participating. It was basically all tech. And tech just kind of lost, ran out of steam, and the whole market kind of came back. This time it's a little bit different. Tech is actually lagging a little bit, which is fine. I think we actually want to see tech take a little bit of a breather and have some of these other areas start to pick up. So, energy outperforming. I know that most of you are, pretty much everybody is now seeing that crude has been rallying and energy has finally got going, but also some retail, some smaller cap tech, a little bit of consumer discretionary. I see the home builders are green today. And the transports, everybody last week was talking about, oh my God, the transports are falling apart. And they started to gain some strength last week towards the end of the week, and they're up 2.3%. The truckers are up a lot. So again, these are all pretty good things. And, if I had a checklist of one by one things that would make me more bullish, I think I'm knocking 3 or 4 of those, top things off the top of the list. And I didn't even talk about the global tensions and how we were just waiting for something to kind of happen to get that kind of out of the way with Syria. So sorry to talk about it like that, but it is just one of those things to kind of knock off the checklist.
Cool. Yeah, I got you. All right, Steven, let's go to you. Any thoughts about why you say the market's going to go up with 0% confidence, like me?
Yeah,
but I took the opposite. I took the opposite side of the bet with 0% confidence. Go ahead.
All right, so we'll switch. So no need to share my screen. There's kind of 2 reasons. The first, which is really interesting. So my team has been doing a study over the last couple of weeks about what the S&P does during expiration week, and I don't have the final numbers yet, but it is a little bit better than half the time that the S&P does go up on expiration week, which is something really cool. So that's one of the reasons. And the second reason is, again, like a lot of people are talking about how they used to use indicators, or they discourse on indicators, and when they really get to find their groove and they really get to finding the point where they are, consistent as a trader and profitable as a trader is, they're kind of just looking at price, and they're getting a feel for the market, and they've been watching it for months and months and years and have a connection with the market. So just looking at the market, a lot of sell-offs are being bought. There's a little bit more volume coming back in the market. And at the same time, you do have some of the big boys like the Amazons, the Googles, the Facebooks, reporting earnings over the next 2 weeks, which has a little bit of a drift into it. So those are the 2 reasons I'd say I feel confident that the market is going to go higher for the week. And we have a good start.
Yeah, no, I hear you. Okay, my screen has been shared. I'm trying to keep things as simple as possible. And first of all, as I just said, predicting the short term is not always possible. One thing that has me concerned with the market is if you just draw a horizontal line, you can go all the way back to around January, and you can see that we are relatively unchanged over the period of time. Yes, we've traded higher and lower, but the market just keeps chopping back and forth. And I agree that it has worked its way higher. Obviously, it's pretty obvious. But my concern is that we're just in this really, really choppy environment. And there's nothing magical about moving averages. They do have a lot of lag to them. But one thing I do pay attention to is daylight. And I've got a couple of YouTubes on this if you're interested. And if you put your info in on that link that I provided, I can make sure you get some information on that too. But daylight is just simply the highs are less than the moving average. So right now you can see we've got this downside daylight, and then we also have negative slope on the 50-day moving average. Now, I'm not going to run out and short the market based on this, but as long as the market stays below the moving average and it's just chopping, more importantly, as long as it's chopped around sort of sideways in here, I'm going to remain concerned about the market. So let's take a look at the NASDAQ real quick, just a couple of things to flesh out. Same sort of action going on in the NASDAQ, and as I think it was it Christian pointed out that we were in a the technology didn't participate this time. What's kind of interesting, if you take a look at the NASDAQ, which relates a lot to technology, you can see we've made brand new highs in March, and then we sold off fairly hard. And this is what I call a bow tie. All the moving averages come together at a very tight fulcrum type of point. And I have free reports on my website, so all this is free, and you can get this out of my books, which I'd mentioned you can get them free also, just to get you up and running. Now, I wouldn't rush out and sell the form because of this, but it's something that you want to pay attention to. And for me to get excited about, let's say, the NASDAQ, you would actually have to make new highs before I would step in on the long side. If anything, it still looks like a short. We have kind of a big picture double top in place. And this isn't quite a bow tie signal here. It's what I call a sloppy crossover, just kind of goes all around. But right here, it's kind of tight. And these are usually somewhat powerful, especially coming off of all-time highs. So I would pay attention to this, especially since it's within the double top. It's somewhat of what I call a second mouse signal, where the early bird gets a worm, but the second mouse gets a cheese. So if you take some of these early signals, sometimes they don't work out, but sometimes you get that second signal that actually works out. So I'm going to remain, I guess, slightly bearish. I hate to label myself because I'm a one day at a time type of guy. I use stops, and I've recently gotten stopped out of all my longs, and we've got a couple of shorts on. So we're just going to hold in those and take things one day at a time. For now, as long as these moving averages have crossed over to the downside, I'm going to err on the short side a little bit. But for the most part, and my clients have been paying me to do nothing, and they're probably wondering why they're paying me, but I wish somebody would have told me 20 years ago, sometimes you could just sit on your hands, and return of capital is more important than return on capital. But we really haven't done a whole lot. So although I'm a little bearish in here, I might sound a little bearish, we really haven't taken a lot of action lately. We're mostly just sitting on our hands waiting for the situation to resolve itself. If we're breaking down the new lows, then we'll probably put on some more shorts. If we make new highs, then we'll likely be putting on some new longs. But right now, we're kind of in between and waiting it out. Okay, long-winded answer. Sorry about that. Simon, let's go back to you. And the question of the week is, this is a reoccurring question that we get fairly often. And then also, I don't know if we did this last time or not, if we're still doing this. Are we still doing the trade of the week?
Yes. Yes.
Okay. So just so you guys can start thinking about it, and I don't think I have anything this week, but if you guys want to start thinking about it, at the end of the show, when we circle back around, I'll ask if you have a trade of the week or some sort of opportunity that you think would be tradable over the next few days. So if you have something, start thinking about that now. And then in the meantime, let's go to Simon and ask him the question of the week. And I think David is using a smaller font now. What type of trading do you focus on and why? And then have you tried other forms of trading that did not suit you as well?
Okay, so I think that's a very interesting question. My style of trading has kind of evolved as I've kind of got better at it, and due to time restraints as well. And so I used to be, when I first started out, I used to trade equities, and I was very much a day trader, scalper. I used to be in and out of positions, and I started trading by basically reading the tape and the time and sales almost without charts, actually, because we were taught to read the level 2 and the open book, which is the specialist level 2, say, and time and sales, and actually use that to figure out where the market was going and get in with the specialist, whatever the specialist was doing. The problem with that is that when the specialist system went hybrid on the New York Stock Exchange, that methodology or that system of trading didn't work. So what I had to do was go back again. That does not work anymore because it's computerized and it's much quicker than what the specialist was doing by hand, I guess, manually. So what I did was went back to the drawing board and decided to develop a way of trading that was timeless, that would be relevant now and forevermore, so that I wouldn't have to change how I view the market. And that was basically understanding supply and demand and how that moves the market. So what I've done, I used to primarily trade a lot on the 5-minute chart, 5-minute, 1-minute chart. And what I've done over the years is moved more to the 1-hour chart for entries using the daily to help guide my trading. I'm finding that's much less intensive. You make the same amount of money or potentially more with less effort. You just let things go for bigger moves rather than getting a 20 pip, 25 pip move. You can go now for the 80, 100, and not be too tied to your screen. But whereas as a day trader or scalper, you have to be tied to your screen. As more of a swing trader or trading more on the higher time frames, it's much more laid back. And again, you have to find what's suitable for you. That's what suits me at this moment in my life, and means I only really need to look at the charts once an hour.
That's again, no controversy. What I get to my answer, I'm actually going to talk about hourly charts and something like Forex. So that's pretty cool. All right, Chris, let's go to you. What types of trading do you focus on and why? And have you tried other forms of trading that you did not do as well?
Right.
Have you tried other forms of trading that you did not? It must be do as well. Okay.
Yeah, I think I know the question. And it's a great question. Just as Simon said, it's a great question.
Yeah.
Or great questions. Yeah. So I basically my trading always evolves. It will always change. You know, clearly we've had a different market the last couple months versus what we had for the majority of 2016, 2017. So my trading strategies will change based on what the market is giving us. So I'm not very rigid in trading styles, but what I will use during the day is well, first of all, I'm more or less a trend trader. So I like to follow the trends. I like to look at the trends, whether they be in, in single stock equities, whether they're in U.S. equities, whether they're in sectors, whether they're in international equities. If there's really some trending markets there, I'm going to try to hop on the trend and follow the trends for as long as it lasts. What I will do to kind of help me identify where the trends are is reading the tape. So I look at aggressive option activity. I'll really look to see when they're picking their spots in different trades, whether they're putting together a big block trade in something, where the institutional money is positioning. That's what I'm really looking for, and I'm looking for trade ideas from that. I'll also do the same thing in ETFs. That's kind of my bread and butter because I used to do that. But I'll really look to see what areas of the market they're going into for more of like the intermediate to longer term trend, which I think people do more or less in cash trading versus the short-term option trading. So from there, based on just kind of how the market is trading and the volatility, I'll basically use a combination of cash trading. So I do manage one portfolio, which is strictly just for trend trading in cash, and I'll use moving average supports to kind of get me.
I thought you were saying cash trading.
What's that?
I thought you were saying castrating. I didn't realize.
Oh, no. That's different.
That's a different methodology altogether.
So cash trend trading, and then on the option side, then I'm also managing more of a momentum portfolio for things that are really moving quickly and things that where I think there's good opportunities in the option space as well.
Okay. All right, Steven, let's go to you next. Same question.
Yeah, thanks. So when I got into investing, let's call it 10 years ago, especially considering my background, one of the things that dictated the direction that my style would be was the fact that, because I didn't have that background, that I didn't think I'd be able to pick the right direction of a stock because I didn't know what a balance sheet looked like. I didn't know what candlesticks meant, trend lines, none of that stuff. I didn't know what it was, and I thought it was going to take me forever to learn that. So I developed strategies that didn't necessarily require me 100% accurate in terms of picking the direction of a stock. So obviously, that being said, mostly options specific strategies that, again, don't require you to be 100% correct when you pick your direction. And it's not short term. It's nothing really inside of 40 to 50 days is the duration. And then depending on the price of a stock or an index or an ETF or a futures contract, and depending how it's done over the last year and how it's done over the last 10 days, and then obviously levels of volatility will dictate what hopefully the path of least resistance is. And I've never really tried like day trading because I tried it, and every single time I tried it, I got smacked around, and I just don't want to do it ever again.
I hear you on that. How did you, just curious, how did you end up in trading for baseball?
Well, as a minor leaguer, you make about $1,200 a month, so it's not a good deal of money. And I didn't get good grades in school, so I was concerned about going out there and trying to get a real paying job because I didn't think I was really qualified to do much else outside of being, let's say, a high school baseball coach. Which that's not saying that's a bad thing, but I wanted to do more. And I wanted to try to get into a business that required me a very low barrier of entry. When you're a baseball player, you're always playing on a team, but for yourself. So it is pretty entrepreneurial. So I knew some people around me that were in the markets professionally, and you only need a couple $100 or a couple $1,000 for a margin account to get in the game, and that's all it really took for me.
Cool. That's a good story. Okay, as far as my style, I trade mostly stocks, and the reason is because I'm looking for an inefficiency. I'm looking for a little biotech stock or an IPO or a IPO biotech to hopefully double or triple over a short period of time. And I think that's where the real money is when it comes to trading. I do have a special report on this. I call it, I think it's called Better the Devil You Know, where I talk about trading more volatile stocks, and I focus a lot on inefficiencies. Now, with that said, I think that efficient markets, let's say Forex or indices, whatever the case may be, can make inefficient moves. And there's a really good current example, a recent example, I should say. And what I like to do in Forex and something like the S&Ps or anything else that's efficient, and this is something that I just kind of do as an ancillary strategy. My bread and butter is going to be in the inefficient equities. But if you do have an efficient market like an index or Forex, I like to look for an all-time high. And this is an hourly chart. And then I like to look for a bow tie pattern. And what's pretty amazing is these major tops will come off of these all-time highs on an hourly pattern. And the same thing at Forex. Let's say you've got a 10-year low, and then you get a bow tie up on an hourly. A lot of times you can catch a really nice little move. As Simon pointed out, you're not really going in to scalp a pip. You're going in to capture a decent move. And when that does occur, it's really worth your while. Now, you might have to go in and take 2 or 3 stabs. And I think it was Einstein said the definition of insanity is doing the same thing over and over to expect a different outcome. And it is hard when you're making that 4th trade off of those lows to go in after 3 losing trades and go in and take another trade. But sometimes that'll pay for all those other trades and then some. You guys mentioned day trading as in not day trading. I fully agree with that. We're only wired to make so many decisions. Very few people are gifted, in my humble opinion, to actually day trade. I know a lot of people who have day traded and burned out. I know some who've gone crazy. I've known some who have fallen off the face of the earth. I think if you are a day trader, I would urge you to figure out, use a Pareto principle to figure out what 20% of those trades are going to give you 80% of your profits, and just focus on those. Or if you were going to day trade, maybe try to get in the morning and hold that position until the afternoon or as long as possible, as opposed to being in and out all day like the rat hitting the button for the cocaine. It's just a bad thing to do to yourself. And again, that's my opinion. I know I'll get some hate mail from that, but I've been there, done that, got the T-shirt, and we're just not wired to make that many decisions. Every time you make a decision, a lot of my work is based on trading psychology. And every time you make a decision, emotions are involved. It's been proven that you can't make any decision without emotion. So every time you're making those decisions during the day, you're just kind of wearing your brain out as far as making those decisions and getting those emotions charged up all day. So it's a bad thing to do. There are some gifted people that can do it and do it really well, but I think that's more of an anomaly than the norm. And I think that your career is going to be limited, again, making that many decisions. And not to go on and on, but just an example would be like an air traffic controller or an ER doctor. I should say like an inner city ER doctor, not an ER doctor out in the country. But one in inner city, I talked to some docs before, and the burnout rate is really quick there. So anyway, short to intermediate term, mostly in stocks, occasionally in inefficient markets like Forex, but pick your spots very, very, very carefully. I can't remember my last Forex trade. It probably has been about 2 months. And there's a couple of pairs I'm looking at right now, but I probably have to sit on my hands for maybe another week before they actually set up. So that's my answer. I'm sticking to it. All right, Simon, let's go back to you. Do you have a trade of the week?
Hi, I'm just going to share my screen again. I've got a couple of ideas, not really trade of the week. I'm looking bigger time frame here, also shorter time frame, but bigger time frame. I like how this is setting up the Australian dollar. And again, Australian dollar is a commodity currency that goes very much with gold. And gold's also, we're going to look at gold straight after this. But again, if this pivots here at the end of this month, then we could break above this level and run up to here. So that's a potentially 1,000 pip trade with a very small risk. And again, you can start maybe anticipating that. Again, we got in down here and these levels down here. And again, there'll be other points, I guess, to get in and manage your risk. That's the kind of timing of an entry when you can actually manage your risk, when you know where your stop is. And I say this many times, a stop is not to stop you losing money. Yeah, that's not the purpose of a stop. That's not risk management. Yeah. Or money management. It's really more on the trade management. Position sizing is more on the risk management, so that when it hits your stop, you don't lose more than what you wanted to, more than that risk unit. I'll prove that to you. It's very interesting. So if you put a stop in the wrong place, how many of you have been have your stop hit, and then the market turns around and goes straight to your target and you're not in? Yeah, we've all done that. Yeah. So you have to go back and figure out, did I put my stop in the right place? So this is a scenario where the stop didn't stop you losing money, it actually stopped you making money, if you look at it that way. So very important when you're taking bigger time frame trades or any trades to know where you're putting your stop, so that the stop should be placed where the idea is no longer valid. Whereas if the stop gets hit, it means I don't want to be in it anymore. It's no longer valid. Not like some people do, size the trade and put their stop in the area where that if it gets hit, they're going to lose their risk unit. No, the other way around. Pick your stop first and then position size so that you risk no more than whatever you're willing to risk. And if that risk amount is known ahead of time, then that shouldn't make you feel nervous. You should accept that when you take the trade, that whatever you're risking is money you pay to take the trade, and now trade what you're afraid of. Worst case scenario, it hits your stop and you lose whatever. Now, so this is the idea here. We already have this move up on the Australian dollar, and we've had the trend change here and start moving up. We're kind of going sideways, but slightly uptrending, because we are making higher highs here, and this may end up being a higher low. If that's the case, we're likely to go higher and maybe break above this area. Now, let me show you gold on the other side, which may be a very good idea long term. Let me just pull up the gold futures. And again, if you pick your levels well, you could have picked up gold right down here and still be in it. Now, this is a monthly chart. We have that same sort of thing that we had happening on the E-minis. We've got pressure building to the upside. Every time it drops down, it's dropping down to a higher level, which means the buyers are stepping up. If you look at the top here, it's getting very weak. If it breaks above here, we could have a run all the way up to this level, which is the next kind of area of interest in gold, which is kind of a nice move. And again, it's already underway. It doesn't mean it, again, these are ideas that may not happen, but if we do go above this area, it's going to likely hit this. Now, hear this. This is very interesting. If you trade in a way that you can take a trade, and it doesn't matter if the big idea works, but depending on how you enter the trade, you can make money anyway, whether the bigger idea works. For example, if you like that idea and you took the entry on the trade, say down here, and you've managed yourself in such a way that you've got no risk on anymore, say you've taken some profit out and it doesn't matter if it hits your stop because you're profitable or you break even or something like that, then you can leave the trade alone and nothing, the worst case scenario is nothing. And you can just let it play out with no emotion, no emotional attachment to the trade at all, which is a very nice thing to do with a long-term trade. You can actually start it out as a day trade and actually manage the trade in such a way that you've got no risk on, and then leave it longer term. But also one thing to bear in mind with, especially in Forex, you have to bear in mind the carry rate. I got hit holding the dollar yen overnight. Now, to hold the dollar yen overnight, when I held it overnight, cost me for one lot around $70 something. It's a lot of money. You know, so imagine if you're holding 4 or 5 lots, it's a lot of money to hold that every night if you hold that as it rolls over. So just bear in mind, depending on what you're trading, there might be a carry rate or a rate that you have to pay to hold it to roll over. So there's the idea that I'm looking at the moment. And those two tie together, the gold along with the Australian dollar. If that breaks up, the Australian dollar is likely to as well, or the other way around. That's it.
Well, again, no controversy. I agreed a lot of what you said about the money management and everything, and you touched upon something really important. A lot of people put a stop where as much as they could risk, as opposed to a stop where they would be wrong in the analysis and in the trade. When I do a presentation, I have a little Trump pop up and says wrong when the trade is at a level where it should not go. If you're trading something coming off of lows and it goes down to make new lows and you're a trend follower, then you're obviously wrong. But lots of good words of wisdom there. Christian, let's go to you next. You have a trade of the week? Oh, did we lose Christian? Can you guys hear me?
Christian, you're muted.
Oh, he's muted.
Yeah.
Now you're muted again.
All right. Sorry about that. Yeah, Mike, like I said, I think I just need a reboot. Sorry about that for the delay. Yeah, so I do have an idea, and I really liked what Simon had to say there. The trade that I'm looking at is an Australian equity. And if I can bring up Bloomberg, which again my computer is just freezing, but it's BHP. It's a steel. It's steel and raw material supplies. So they do a lot in this material business: iron ore, gold, titanium, nickel, copper. So what caught my eye in this, and this is basically very much how I use option activity. There was a really large trade that happened on Friday, about $1.8 million in option premium going out to August. So you can see it's 28,000 of the August 55 calls. So that, of course, gets my interest. And when I'm looking at option flow, again, I'm strictly looking for an idea and just looking where some positioning is going on. And clearly, we've seen kind of pick up in the material space and the oil space. So I started to look at the chart and started with the weekly chart here, considering that they're going out to August. And what's nice about BHP is they don't report earnings quarterly, they report earnings semi. So you don't have to worry about earnings till August, which is, I believe, when they report their next earnings. But, going back to the weekly chart and looking at a longer term chart, why I really like this is because, first of all, it's still in the retracement mode. It's the high that it made, which, is back at over 100, which again, doesn't matter that much, but what does matter is that it's done some really nice retracement here. And it did have a pullback from basically for a couple months, but right into the top of value. So I look at both moving averages and I look at value areas because they really give a good sense of where buyers and sellers have showed up previously. So notice that we came right into support a couple weeks ago and we had a huge bounce last week off of that support level. So that's basically it. I like the combination of the positioning that's going on in the option world, and I like the long-term chart. I like the bounce, and I think it's good at this point to have some exposure to this material / steel space. And as I like to tell a lot of a lot of my members is sometimes you don't have to get in, you don't have to jump right in, especially for a longer term trade. You're getting a chance today. It's down 1.3% and a lot lower than when that original call buyer came in. So you can get the trade for cheaper than they got it out in August. So I'm in this trade, and I'm actually thinking in cash as well, because I think we are seeing a little bit of a rotation into this group and some more value plays as well.
I have a quick question for you. I'm not a huge fan of volume, but I played around a little bit with volume by price, and usually just shows me what's already in the chart. Is that volume by price you have plotted there? That's kind of cool.
Yeah. So what these ranges are with the green, yellow, and red line is it's just about a standard deviation of the previous price period. So right now, if I'm on the daily chart, that's the previous month. And really where this gets interesting is just like this. If you look at the weekly chart, this value area is based on last year's volume profile and one standard deviation around there. And it's amazing that these things will just act as great support and resistance levels for where to take trades. And it just it also just functions very well when you use moving averages in addition.
Yeah, it's really cool. So if you go back to the second block, one block back where you have that little base, that's where you have most of the volume. It corresponds with the base. And that volume, is that 1 month's worth of volume, or is that a volume from the past?
On the weekly chart, the value area will be for the whole year.
Oh, okay.
If you go to the daily chart, you'll get the value area for the previous month. So
cool.
This is the April value area, and it's based on March's activity.
Cool. That's really cool stuff. All right, neat. All right, Steven, let's go to you. You have a trade of the week for us? We can't hear him. Turn your mic on, Steven.
Hey, Steven, you're muted too.
He's going to give us his pitch.
All right. Well, it's not necessarily. Can you hear me now?
Yeah, yeah.
Well, it's not necessarily a trade of the week. It will just have to reveal itself to us. But with earnings coming up, obviously a lot of stocks are making their way a little bit higher. It seems like everyone, except for maybe you, agrees that we might be working a little bit upwards here in equity prices. So I would love to see if I can get long a little bit Facebook or a little bit of Amazon. Probably would sell some put spreads here, give myself a little bit room to be wrong, if they sell off before earnings or during earnings. So I don't have anything that's screaming right now because everything to me is kind of mid-range, and I look out a little bit more in terms of a time frame. But I would love to get long a little bit more Facebook if there's a little bit of a sell-off here based off of their earnings or something going on before their earnings. And the same with Amazon. Would just love to get a little bit long those if there was a little bit more of a sell-off.
Okay, cool. Well, I just got through saying that I'm not a big fan of efficient markets, and the Qs are obviously an efficient market. But with that said, we do have a bow tie down off of all-time highs, and then we've pulled back in here. Your actual trigger would have been right around here, about 175. Let's just say 157. I'm sorry, and a half. So I think it's still a viable trade, but I would make sure it took out at least 157 and a half, maybe 156 would be a good entry on that. And then a stop somewhere above this pullback would suggest that you were wrong. Again, this is not, you're not going to make a fortune off a trade like this. If you're looking to get a little exposure to the short side, I think it'd be a good play. But other than that, I really don't have anything great. I'm keeping an eye on an IPO or two. Right now, I tend to like them more, even though I like speculative issues in general. But I like speculative issues when the market gets a little questionable like it has been when it's bouncing around a bit. So maybe keep an eye on some of the newer IPOs that are coming out, and they could trade in spite of the overall market, or they could ignore the overall market because they don't have any fundamentals. And again, circling back to that inefficiency thing, they're very inefficient. You can make large moves over a short period of time. So right now, I would keep an eye on the newer IPOs, those that have come public over the last 100 days. I'm not a breakout trader, but they do have some breakout characteristics, so I pay attention to that, either breakouts or pullbacks in the IPOs. So that would be the other thing to look at now. And then again, if you want some short side exposure, the Qs, but only on an entry, I would be very happy if this never did trigger. I would prefer if the market just went up. It's easier for me to trade when it goes up, and it's easier for clients. Most clients don't short, but you have to play the hand that's dealt and be willing to go long or short. All right, let's go ahead and start wrapping things up. Simon, let's go to you. Any closing thoughts? Anything else you want to tell us about TradeSmart.com? TradeSmart 4X, the number 4X.com. Floor is yours.
Yeah. Just checking if you can hear me. Let me share my screen again.
Yeah, we can hear you.
Okay, so anyone interested in becoming more familiar with my work and what we do, you can go to my website, TradeSmart4X.com. That's the number 4 and then an X over here, so you can see this clearly. And I've got a 15-minute video here that you can actually learn about the steps you go through to develop a profitable trading strategy and actually develop one and actually trade it on like forward testing in a time back in data going backwards. So basically trading it in whatever the market does to show you how you actually go about testing a strategy. And you'll see that in a very, very short amount of time, the steps that you need to go through. Again, it's very important to, once you learn how to read a market, to actually know how to translate that into a workable trading plan and trading strategy, and how to go about proving that that strategy actually has a positive expectancy. That means that you'll make money over time trading that strategy. I have I put out a video once a week about where the dollar's going next. Pretty accurate. It's around 3-4 minutes once a week. It's on the YouTube channel, or you can get it on the blog. So you can once you sign up for here, you'll automatically get an email. And we launched our weekly, we have a trading room that we run every day. And we have basically on Sunday, we prepare for the week, as in we set up our levels on the charts and have a plan of what we're going to do for the following week and have an idea of where everything is. Again, it's very important to have a finger on the pulse of the market at all times, and also a finger on your own pulse, so you know how well you're performing. So this is the way to do it. I always think that preparation equals confidence. I always say to people, if you go to an exam and you're prepared, you feel confident. You go into the room and you just take the exam. If you're not prepared, then it's very difficult to trade with confidence. So this is what we do to prepare at the beginning of every week. And we also trade live every single day. Basically the US session, we start like half an hour before, 7:30 a.m. Eastern time to around 8:30, 9 Eastern time. That's it. You don't need to be trading all day long. If there's something to do, we take a trade. That's our live trading room. But this is our preparation session. And you can click here to join now. And basically, we have a special offer on at the moment because we just launched this part of it, which is a recording of our session. And you'll get last week's recording as well. So you can go through and see all the levels that you can actually trade against. Again, obviously at your own risk, but that's what we trade against in our trading room and on a consistent basis. If you go to the checkout by clicking here, it'll take you to the checkout, if you want to lock in for a year, you'll get over 50% off now, and put the coupon code is launch. Okay, the word launch, type that into the actual checkout, and you can try it for 1 month for $47. I think it's $50 off. Come try it for 1 month and see if it can help you with your trading, help you prepare, give you an idea of what you need to go through. So that's what we have kind of on offer now if you're interested.
Okay.
Okay. Thanks a lot, David and David. Thanks.
Yeah, thank you. I like that. I'll have to go check out your video on your homepage. That sounds kind of interesting. Christian, go to you. Any closing thoughts? Anything else you want to tell us about Tribeca Trade Group? The floor is yours.
Yeah, sure. I think, which was already mentioned, which is a really good point. Big week for earnings. I think that'll also provide some clues for direction. So I think that's really going to be the nice catalyst. And I think out of all the distractions that we've had the last couple of weeks, it's nice to kind of get back a little bit to the fundamentals and to some of the reports, and without everything else going on politically and so forth. So I'm really interested to see how this quarter's earnings reports. The only thing that scares me a little bit is they're getting a little bit built up. So we'll see how it goes. And as always, I think it'll be a company by company situation. But anyway, it should be a fun week for names that are reporting. Yeah, my website is tribecatradegroup.com. Would love to have you guys check out for, I have a trial for a week, $7.99 for the first week, and you could just kind of see what we do on a day-to-day basis, which is reading the tape and putting out trade ideas, looking to see where that money is being shuffled around institutionally and looking to spot the trends. So you can check us out there, tribecatradegroup.com, and it's the Elite Trader package that we offer the first week for $7.99. Thanks again for having me on. Again, really appreciate it, Dave and David. Thank you.
Thank you, Christian. All right, Stephen, let's go to you next. Stephen Brooks, stephenbrooks.co. Tell us, you have anything else you want to tell us about yourself or the website?
Yeah.
Yours.
Can you see my screen?
Not yet. We're still seeing you.
All right. Share screen. There we go. Okay. Well, again, thanks everyone for having me on board here. It's a lot of fun. I think for all the people who are out there who are listening in and they're tuning in, whether it's this session or other sessions, I think one of the things that what I find is really interesting is, obviously, there's two sides to every market. I have a strategy that's a little bit different than the other people. Like Simon's strategy is a little bit different. Dave's strategy is a little bit different. But I think one of the things that's very, very interesting when I hear everyone talk is how they've all kind of gone through their hurdles, their obstacles to come up with a strategy that they find for them. And then once they find that strategy, they're very, very consistent. So it's always really cool to be on these because everyone always has a different way to be successful in the market. So it's really cool to hear all these. If you're interested in kind of having a little bit more of a discussion, again, I didn't really have a background in the market, so I love hearing and learning as much as I can. If you want to take these conversations a little bit further, hit me up, stephenbrooks.co/one-on-one. This is usually $699, but for you guys, for being here on this training, I'd love to talk to you guys for absolutely for free. So we'll jump on a call for 30 minutes, an hour, however long it is, and we'll talk markets. And I'm happy to do that for you guys. And again, thanks for Dave for having me on.
Yeah, thank you, Stephen. We appreciate it. Okay, again, Dave Landry from DaveLandry.com. If you look at the screen that I've shared here, it's DaveLandry.com/CFN for Crowd Forecast News. And if you put your information in, I'll give you a $100 gift certificate, which you could use. It's reusable, I should say. So you can get all 3 of my books from my store for free. And then you'll also get access to the free reports. And I'll give you a direct link to the one on inefficiency or efficiency, I should say, that I talked about earlier, which kind of dovetails in with this presentation. And then there's 4 videos on trading from that aforementioned Trading Full Circle course. So check all this out. Join me weekly for a webinar, and that information will also be in the email that you'll get from this. And you can come ask questions live if you want there. Absolutely no cost to get up and running. Check things out, see if you like me or not, see if my methodology makes sense. Like Stephen was saying, we all have our different ways of doing things and our different methodologies and time frames. So check out the way I do things. If it strikes a chord with you, then by all means, I'd love to have you around. I do have a trading service where I recommend specific stocks, give an entry, suggested protective stop, initial profit target, and then day by day we manage those individual trades. But get started for free, and if you like what you see in this introductory information, then you'll love the paid product. So again, I want to thank everybody for being here today. I'll let David Kosmeter close the show, but Simon, Christian, Stephen, thank you guys so much. I think this was a very good show. So very excited to be here. I learned a lot as usual. So thank you guys for teaching me a little bit here. And let me turn it back over to David Kosmeter. David, thank you once again, and thanks to Crowd Forecast News, a division, obviously, of Timing Research.
Yeah, thanks, guys. Great show. And just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. You can also go to TimingResearch.com to get access to any of the past reports or show archives. And be sure to join us tomorrow night, April 17th at 4:30 p.m. Eastern Time for Analyze Your Trade, episode number 31. Evan McDaniel will be a first-time guest on the show. Also, Jim Kenny, Roy Swanson, AJ Brown, and Michael Filliger will be moderating. So I just want to thank my guests again for this week. Simon Klein of TradeSmartForex.com, Christian Fromhertz of TribecaTradeGroup.com, Stephen Brooks of StephenBrooks.co, and Dave Landry of DaveLandry.com. Thanks, everyone.
Thank you.